Good afternoon. Thank you so much for joining us for another segment of Resolving in 30. My name is Rafael Cruz, Membership Services Specialist at the Greater Philadelphia Hispanic Chamber of Commerce. With us, we have my coworker, Jao Techer, our Program Coordinator, and our Vice President, Javier Suarez, we just met, who will be with us this afternoon. Before we start, it's very important. For those joining us via Zoom, please turn off your microphones, and if you have any questions during the presentation, do not hesitate to write us in the chat section. We'll be taking a look at your questions. So this afternoon, we will be hearing from Whitney Bayliss, VP Small Business Relationship Manager at Santander Bank, who will be giving us all the important information regarding lines of credit. As many of you know, access to capital is one of the most important topics, especially during the difficult economic situation we are in. So after Whitney presents us with the information, we will answer any questions you may have on the subject. So Whitney, how are you? Thank you so much for being with us.
Thank you for having me, Rafael. And thank you for those who've joined. I just wanted to talk a little bit about lines of credit, how to obtain one, why you would need one, and address any questions that you might have about it. So I want to talk a little bit first about why you would use a line of credit, because I oftentimes have business customers come to me and say, I need a line of credit. I need a line of credit. Like that seems to be the go-to for most business owners. And so the thing that I like to do first and address first is, so what will the uses be for your line of credit? Because it may not be in fact that you want a line of credit. You may want working capital, and that comes in a few different forms. So the first thing would be to feed your inventory turnover. So say you're bringing more inventory in and you need to kind of feed the cash, so that way, as prior to customers purchasing it, you have a lot of inventory sitting there, which is a lot of cash sitting there. So in order to turn that over, you may need some additional funding to help get you over that hump to when the receiving end or your purchaser is buying either your service or your product. Sometimes it's for marketing. Sometimes you want to run a special. You are interested in increasing your business, growing your business. And you know that you're going to see the fruits of that pay off within the next 12 months. Then you can use a line of credit for marketing. In some cases, you need to use it to hire employees. This is kind of industry specific, I would say. So in some service businesses and some sales businesses, you may not see the turnover come in the next 12 months. So that would be a different type of funding situation that we would like to visit. But if you're going to see the return from that labor within 6 to 12 months, a line of credit isn't a bad idea. Also to supplement accounts receivable. So say you're billing out 30, 60, 90 days. You oftentimes need cash to float you the 30, 60, 90 as your customers are taking that time to pay you. That's money on the street that you have that with a line of credit, you can use it, you pay it back, you use it, you pay it back. So you can use it, and as soon as your customers pay you, you can return the funds to the line of credit. Things that you wouldn't want to use a line of credit for, but I oftentimes have people ask me for a line of credit for these, for equipment. If you're not going to see the return of that labor from the equipment or the vehicle actually more or less the equipment, come back within, again, 12 months, and I'll use that time frame a lot. You don't want to use it for equipment. Vehicles, you can do an equipment vehicle finance on it typically through the dealer, through your local financial institution. Those are things that you want to spread out over longer than 12 months. Real estate purchases, obviously, typically a much longer term. Renovations. Oftentimes renovating, I recently did a chiropractic office. He wanted to do a line of credit and renovate the inside of his building. It's not going to pay off in the next 12 months, so we decided to do a 5-year term loan. That's for another conversation. Buyouts. If you're purchasing from a partner, 2, 3 people are in the business together and you want to do a buyout, typically, again, that's going to be 2 years or longer. So when I say uses for line of credit, I mean for items that you would pay back in less than 12 months. Typically with banks, there's a cycle down or a drawdown. Some banks are down to 0. So just for example, say you have a $100,000 line of credit. Some banks are going to ask you to pay that down to 0 for a 1 month period. For a 30-day continuous period, it may need to be at 0. Other banks are only going to have like percentage pay downs. For instance, with my institution, you would have to pay it down less than $40,000 for 30 consecutive days in every 13-month rolling period. So you hear your banker or your financial institution talk about a cycle down or a drawdown, and that's what they're referring to. So lines of credit are mainly to be used for items that you'll see the return on that within the next 12 months. You can go ahead to the next slide, please. The financial information you're going to need to provide. This is very general and can change among institutions. So your recent tax returns, business and personal, typically between 2 to 3 years you need. And it depends. You may file a Schedule C, you may file a 1065 and 1120, depending on what you file. You may have 1 tax return, you may have 2. So you'll need to provide 2 to 3 years, oftentimes with SBA, which is a lot of lenders' preferred method right now. Just with the SBA guarantee, they may ask you for 3 years. It's highly likely that they would. Personal financial statements. This may be provided to you by the lender you're requesting the credit from, but it's something that your accountant would probably be able to assist you with. Even your banker, oftentimes I do help our customers fill these out. And you'll need one for each person that's guaranteeing the credit. A debt schedule. Debt schedules are typically for the business only, but each lender may have their own policy around that. In my experience, we've done debt schedule around the business. So any debts that the business may have, we'll need to know typically what like the original balance was, when the debt was initiated, what your monthly payments are, and what the debt is, like what you use the funds for. Interim financial reports. So that could be if you're on extension for 2019, excuse me, we would need your interims for 2019 plus an extension letter from 2020. And then most likely we'll need considering the environment right now, we'll probably need the first half of 2020 as well, just to see, with the pandemic, how it's affected your business. But I would be prepared to have interim financial reports. A balance sheet. So balance sheet, if you're filing a 1065 or an 1120, it's probably included in your tax return. If you're filing a Schedule C, it's most likely not, and you may have to have your accountant complete that on the side. They may have it, it just may not be part of your tax return. So that's something that you will need to provide. A profit and loss statement, something, again, your accountant would have, and that and the balance sheet are typically go hand in hand. You can go to the next slide, please. All right, so this is what I often discuss with the customer after we've determined that the line of credit is the specific need. So the use of funds, you need to be able to articulate what that will be for exactly. You can't just say, I need a line of credit, and not be able to say what you will be using the funds for. Banks like when they know that you have a business plan, they know that there's a financial plan in place and how it will help your business to succeed. So if you can come in and say, I'm using these funds, I have, a majority of my accounts receivable out at 30 to 60 days, and I just need to help quickly turn that over, that obviously is a good reason. And your lender can also I speak to everybody and just ask questions about, well, will you use it for the examples that I gave on the first slide? I typically ask a lot of questions around that. You need to speak with your accountant about this, but year-over-year profits and losses. So outside of 10%, banks look at a little bit closer than they do if they're inside of 10%. If they're outside of 10%, depending on your industry, they could say, that's too quickly, but again, it depends on you could be growing too quickly, but it depends on, it's industry specific. So it's something that you just want to keep an eye on, and be able to explain, okay, I did $100,000 this year, but I did 150 the following year. That's a significant amount of growth. I did 1.5 million this year. The next year I did 3, I doubled my profits. You want to be able to speak to what caused that. So if your gross annual sales is the trajectory is upward and your profits are also upward, okay, we want to be able to speak to that. Contractors, the profits can swing high and low year over year, just depending on what the contract at the end of the year did, and if it came in and was paid in January. But that's contractor specific. So really depends on your industry. You need to be able to speak to how COVID has affected your business. So are you booming now? Or were you closed for 3 months? And you need to speak about your plan on reopening and how that's affected you and how your customers are and what your expected return rates are for business. It's just something good to know if you have the information available to you. You need to be able to speak to business history, managerial history, meaning, I've owned the company for the past 10 years. I've recently brought in a partner 2 years ago. Or I purchased the business from my father 6 years ago. Just speak to the managerial history and who the guarantors and who the main players are in the business. Be able to highlight yourself and your business. So say you won either a South Jersey or a Philadelphia award, say that you're in a magazine, speak to how that's helped you. If you are highlighted in, say, one of these sessions, be able to speak to that and your partnership with the Hispanic Chamber. I often find that helps significantly, that you have a good rapport within your community. Reference any awards and certifications. So if you're HVAC, be able to speak to, you did so many years plus, how much training you have. That certainly helps a bank feel more comfortable that you've done things for, a long period of time, or you've worked for somebody else for a long period of time, and you have a good handle of how to help your business succeed. And then lastly, but this should priority order, this goes closer to the top, how the short-term capital will benefit your business. So kind of goes in line with what the use of funds will be, for. You need to be able to speak to how this will get your business to the next level, or how this will help keep your business afloat right now, because if we're being completely transparent, that's the situation for a lot of business customers. Is there a question, or can we move to the next slide?
Yes, we do have a question from Silvia Lucci.
Okay.
She's asking, can you use it for a down payment?
So a down payment, I have two answers, yes and no, but what is the down payment for?
Purchase. Purchase.
Of a building, so I wouldn't use a line of credit for a down payment on a building purchase. And then the thing you have to be careful with that is if you would obtain probably a term loan for that, because you would want it for, you're not going to pay it back within 12 months. So you would probably want it for a longer term. But what you have to then keep in mind with that is, how will that affect your debt to income ratio? Will it bring it down? They may want to know what the source of funds were from. And oftentimes the bank doesn't want to see oh, I got a loan to put a down payment, because, you know, oftentimes now they're asking for 20, 30% down on buildings, which typically are not on the lower cost end. So I don't recommend using any type of lending as a down payment. I do get that question very frequently though. Thank you,
Awesome.
Sylvia.
And Antonio is asking us, can a line of credit be used for a micro acquisition of a competitor?
So again, depends on the industry. I would typically say no, because you're unless you foresee that the business that you're acquiring is going to pay off the business that you're acquiring. If it's going to pay that off in 12 months, okay, but it depends. Are you retaining employees? Are you, you know, there's a lot of other questions that go into that. Generally, no, I wouldn't. I would suggest a short-term loan, possibly 24 months, 36 months, but I would not suggest a line of credit.
All right. Is there any other questions? So no more questions. That's good. Okay. So on behalf of the Hispanic Chamber and the business community, we want to thank Whitney and Santander Bank, not just for their time, but for their continued support to the Chamber of Commerce and the community. I believe wait, do we have another question?
We do.
Oh, we do.
Yeah.
Great. Okay, awesome.
So
Antonio is asking, can you explain more about working capital? Like what is considered as
yeah.
working
So what type of business do you have, Antonio? Because I think industry specific, it's easier to address the question. Consulting. Okay. So okay, so in your industry, I'm actually working on something with a consultant right now. So if you have employees, if you need to hire more employees to get more work, that would be, you would need working capital for that, because you're going to have to first hire the employees. You're going to have to pay the employees, which you know is a significant cost out of your business. That's probably the highest cost, is salaries. And you're not going to be able to obtain the income from that until after the project's finished, or you know, depending on how far out you're billed. So I guess depends on what type of consulting you're doing and what you need to do with it. So a lot of consultants use working capital. I've done it over and over again, because oftentimes they're employing 1099 employees. So they're bringing somebody in, they have to pay them all while the project's occurring, and they're not receiving any payment. So working capital for a consulting company is highly recommended, yes.
Excellent. Do we have any other questions? Yes, from Cecilia. Can you give an example of what you were talking about a couple of slides back? Can we go a few slides back, and Cecilia, could you kindly point out to which one?
Keep going back.
One
I
more?
think it was maybe one more.
Was it the yes and no?
No, it wasn't that one. It was the one. Anyhow, Whitney, you were talking about something, and I'm sorry, I should have taken better notes when you were talking about it. But you were giving I'd like to see like a concrete example, and I might not even be able to explain this. So
that's okay. So what type of business do you have, Cecilia?
So I have a graphic design and specialty print studio.
Okay.
But it wasn't related to that. It was just more understanding the
Was it in reference to if your profits exceeded 10% or were less?
Was it regarding the application process?
No, it wasn't the application. Maybe it was the short-term capital.
Was it the cycle down period and the drawdown period? Okay.
Yes, that.
Okay. So I will use $100,000 for example, just because it's an even round number. So say you obtain, you're successful, you obtain a line of credit for $100,000 from your local bank. Your local bank is going to have either a cycle down period or a drawdown period. It's the same thing. People just, they reference it different names. So
Okay.
what a cycle or drawdown period is, so from, say you obtain the line of credit, just to make this easy, in January. So January of 2020. So to January of 2021, you have a graphic design business. So obviously you're constantly producing and you're billing customers out. Now you're producing, you're paying salaries, you're paying for products, you're paying for equipment, like you're paying all of this while you're completing a project.
Mm-hmm.
So say you get one for 50, I'm going to use 50,000. I know that's a large number, but say you have a $50,000 project and you know, I'm not going to be paid for this project for, 60 days out because it's going to take me this many days to complete it. And then I have to bill them and they have 30 days to make the payment. So you may draw on your line of credit. So now you only have $50,000 available and you've used $50,000. So you use the $50,000 to fund that project and then you bill the customer. So when you receive that payment, the importance of putting that payment back on your line of credit is for this reason. So now you're sitting at half usage at 50%.
Mm-hmm.
If you continue to do that, because essentially it's just like a cash injection into your business. So it's not actually there. Does that make sense? Like it's not money that you have to use. It's money that you use to fund your business, but it's not money that you have. So if you sit that there and the customer pays you back and now you have used the $50,000 on, something else rather than paying the line of credit back, and you get 8 months, 9 months, 10 months into a line of credit and you're still sitting at 50% usage, before you get to that 13th month, so January of 2021, you need to be able to pay that line back to possibly zero. A lot of institutions will want it to be at zero for 30 consecutive days.
Okay.
Or other institutions may just ask for a percentage of it back, because the use of the line of credit is to use it to pay it back, to use it to pay it back. It's a short-term cash injection into your business, not to be used for long-term purposes. So what are the repercussions from that? So say you don't pay it back. Say you have another project come in for $20,000. Now you're sitting at $70,000 on the line of credit and you're at 70% of the limit. Much like your credit cards, except credit cards don't have drawdowns typically. Mm-hmm. So you're sitting at 70% of the limit. When you get to January of 2021, your bank may say, you haven't been using this line of credit how you're supposed to be using it. It's supposed to be a draw, a payback, a draw, a payback. And you're just consistently drawing on it. You say you did it even in smaller increments. There needs to be a payment back. Oftentimes lines of credit are only set up for interest-only payments. So you may only be paying monthly what you owe in interest. You wouldn't be paying anything towards the principal. And that's what they want to see, that you're using it and that you're responsibly paying it back towards the principal, not just interest. Because again, it's short-term capital. So at the end of that, if you get to January of 2021 and say, hey, I can't pay this back, like, it's the end of the year, I paid bonuses, I did this, I did that, the bank may say, well, you know what, we're going to convert this into a term loan. And if you have $70,000 sitting out on it, they may just cut you right at $70,000 and then start giving you a principal and interest payment at that time, because they don't see the draw, the payback. So if it's not being utilized as a line of credit, oftentimes financial institutions will do what they say, call the line of credit, and they term it out at whatever balance you're at that moment. And from that point forward, give you terms around principal and interest only payment, or principal and interest payments over, say, like 24 to 60 months.
Yes.
Does that answer your question, and does it make sense?
Yes, absolutely. Okay. And like, for example, I'm going to go after the elusive government contract? I know it's kind of like the unicorn because it's
Sure.
it's there, but how to get it and
Right.
all the hoops to go through it. But let's say, you know, I finally get my certification. I have all those, you know, alphabet soups. I'm you know, minority owned, woman owned, whatever. I'm a WASB, all these things. So then where I'm thinking where I need to get a line of credit is that if I do get a substantial contract, I might not have the cash, the outlay to be able to buy the products or
Correct.
buy the materials. So
Mhm.
therefore I would lean on the line of credit temporarily,
Mhm.
get the job, complete the job, and then pay the line of credit back.
That's a perfect example of why you would need a line of credit.
Okay,
Let's
yeah,
say this, the best time to get a line of credit is when you don't need one.
right,
The very best time.
which is now. So I
Yes.
want to,
So I often have customers, you know, say, oh, I don't need a line of credit right now. Contractors frequently are like, you know, they'll come and say, oh, I need a loan, you know, they need a loan when, as soon as they like bid on a big job. I need a line of credit. I need a loan. Okay, what do you need it for? We go through all the steps. When do you need it? 2 weeks ago. I'm like, no. That's not going to work like that. And previously, like banks, I could, just speaking from experience, I could turn, you know, $150,000 lines of credit around in 5 business days, 10 business days. That is not the case now. Like, it is far from the case right now. There weren't a ton of, we were, I guess, in, you know, they had the inverted yield curve, so they saw this economic strain coming. But so we were looking closer at financials, but now we are line by line, much like every other institution is. So best time to get one when you don't need one.
Excellent, Whitney. And Sylvia is asking, what happens if you do not use it?
So here's what I'll tell you. So everybody's going to be a little bit different in the experience I've had. There's most likely going to be an annual fee. So just like any credit card you have, even personally, oftentimes there is an annual fee, especially when you're just starting out, similar to in business. You're going to, say you have a $100,000 line of credit. There may be a $250 annual fee because although you're not using it, we have set aside $100,000 for you to use. So there may be a promotion. You may want to inquire about it. The first year, it can possibly be waived. You can check with your banker. But typically, there is an annual fee. You will still have to pay it, even if you don't use the line of credit, because we have those funds allocated on the side for you. If there's year over year where you're not using it, the bank may come back to you and say, hey, is this something that you really need? Or they may ask you to provide some additional information, you know, supporting what your need is for this, because there, quite frankly, are other customers that we could possibly allocate the funds to if it's not something that you will use. It's not a bad idea to have, though. It's very good to have. Even if you use it minimally, it's a good avenue to have access to.
Excellent. Thank you, Whitney. And our time is up. That's 30 minutes of Resolving in 30. So on behalf of the Hispanic Chamber and the business community, we want to thank Whitney and Santander Bank for their continued support to not just the chamber, but to the community. As you all know, this video will be available on our website for those of you who would like to go over it again. If anyone has any questions, because our time is up, if you have any questions, please do not hesitate to contact us or Whitney, or we can connect you with Whitney and the folks from Santander. So finally, I urge you to please visit our website for information on upcoming events, tools, and resources available to you. And that concludes today's Resolving in 30. Thank you very much for being with us, Whitney, and the folks.
Thank you.